Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 11th of May. All right, now the Asian markets have opened and there's hardly any movement at the moment. You can see here on the good cross section of the majors, they've hardly ticked up here or there. So nothing to get excited about, especially which is a bit strange because we were expecting the non-farm payroll, to be a huge sort of kick in the arm, whether the dollar would rally or not. The numbers probably slightly better than what was forecast. Okay, the forecast was minus 22 million. It came in at minus 20 and a half. Unemployment rate up towards 15%, but that was once again expected, right? If anything, a little bit better than what we saw. So what does that mean? Well, it's a bit tricky. Now, what I was saying on Friday is keep an eye on the equity markets. That'll be a bit of a guide for you. Now, it's not as easy as it was when the coronavirus situation all started because, we were getting the direct impact from the equity markets and the currencies were moving around, risk on, risk off. Now, we've got a situation where the US dollar, because there's so much uncertainty, where the US dollar was becoming the safe haven and it was going up and down in relation to what was happening with the equity markets. At the moment, you'd have to think that, this result, right, it's potentially going to lead to more easing. Now, as I said also on, I think it was Thursday, Friday, you're looking at the bond market, right, and seeing what's happening there. Now, the bonds have sort of rallied slightly, okay, from Friday. So that's taken a little bit of pressure off there. So that move in the equity markets, almost up 2% there on the Dow Jones, you'd think it means more easing, lower interest rates, and all these sorts of things, okay? So it's a bit hard. This is the problem with geopolitical events. It's very hard to work out what is impacting what with various instruments. Is the equity markets moving because of the poor number, the better number? Is it moving in accordance with what's happening on the geopolitical front, as in the rollback of all these lockdowns, etc.? It's a little bit hard for me to exactly pinpoint, okay, put my hand on my heart and say, that's it. I can't do it at the moment because it's a little bit varying. But what I can do is look what's happening, okay, with the dollar, with the equity markets, and piece it together from there. So the dollar index pretty much right in the middle of this support and resistance, in the middle of the range there. And you can see dollar yuan. I don't know if the yuan's a real thing these days. I don't know. I guess some people are trading it, but I haven't been. Having a look here at the major pairs, okay, now we did see that dollar weakness, okay, through most of last week. So what we're seeing here is, dollar strength there on dollar yen. You can see also dollar CAD going down. So, but have a look, trying to isolate where everything is in relation to what we've just had. Now, the non-farm payrolls is usually the big cranky number in the market, very difficult to trade, 6 or 7 different variables coming out at once. It's, low liquidity, high volatility, all those sorts of things. But look what we've got here. We've got the Aussie. They've all sort of found fair value, but they don't know where to go from here. Now, it's pushing up against resistance, up and down through that. That tells me that it's a pretty uncertain market. No one wants to buy the Aussie up here. And at the same time, no one is really looking to sell. And this is the same for the Kiwi. I know we don't have levels at the moment on Euro and Sterling, but it's a very similar outlook. If anything, Sterling's got a bit more of an upward bias, but Aussie, Kiwi, and Euro, for my liking, are just cruising sideways. And you can see we had the Canadian employment numbers as well. They were slightly better than expected, but it's sort of just treading ground as well. Very uncertain as to where it goes from here just at the moment. And it's a bit of a weird one because after the non-farm payrolls and also potentially the Canadian numbers, we usually get a very clear picture of what's coming up. At this point, it's not that clear. Right. And there's been, I think if you've been watching the news, I think Russia, China, there's been an increase in the coronavirus situation. So I don't know what's going to happen there, but dollar yen is the one pair out of all of them that has ticked to the top side, right? Whether that's, the yen coming into play. Now, when dollar yen falls, the media and everyone else is saying, well, it's the yen safe haven. But the next day, it's the dollar safe haven. So don't get caught up in the safe haven trade. It's being bandied around too much. It's very hard. It's very easy to say that when you don't know what's going on. All right. And the other thing they commonly use is, profit taking, right? that when you see profit taking in the media reports, generally means they don't know what the hell's going on. So that's where we are with the currencies. It's a little bit tricky for my liking. And just to give you for those that don't have Metastock, give you a look at the sort of general news that's going around. We're looking at dollar up as focus shifts to economic restarts. Okay, it's not really up far, right? So that story there is, if you got your charts, everything up, it doesn't match up with anything, right? I know it's up against dollar yen, but the rest of the currencies, well, it's pretty much just where it was. So then you got the BOJ, debate of Great Depression-like downturn. I mean, Japan's been in a depression for 30 years. I don't know why they think it's anything different now. So basically, there's no fresh momentum coming from anywhere clear, right? I'm sure Donald will step up to the plate and give us something to think about as we start the week. But right now, to me, it's a little bit tricky, and that's pretty much reflected in our daily FX market insight. Now you got Mondays liquidity is always a bit of a problem, right? Okay, Europe, North America, this Sunday, right? So the full liquidity is in the market. So more often than not, it's not great trading conditions, and the various geopolitical issues relating to COVID-19 obviously impacting things. They're active pairs at the moment, clear direction. Well, to me, yeah, sure. On the hourly charts, dollar yen's going up, but on that longer term time frames, it's just trading sideways. So there's no real clear and obvious trade right at the moment, and that's pretty much reflected in our sort of analyst top picks. You won't find anything there just at the moment, and that's primarily because all the major pairs have been benched. They're all overall just trading sideways. Doesn't mean we don't see something by Tuesday, Wednesday. It can change very quickly. But at the moment, not much. Now, Aussie and Kiwi, I've got my sort of eye on these. The pairs that do have a bit of momentum, they're the ones worth keeping a close eye on, right? So dollar yen, Kiwi, dollar CAD, Aussie, okay, they're worth watching very closely. We do have some levels here on these pairs. So keep an eye on those. Something it's more likely that a trade comes out of those pairs than anything else. And then coming through the data, there's not much out today, but we do have some CPI numbers to think about come Tuesday. US CPI, will that come into play? I don't think so, but you know what? Stranger things have happened. So make sure we keep an eye on those things as we go through the week. All right, guys, not much else to really tell you. It was one of those non-farm payrolls, which was a bit of a fizzer. We had the anticipation. Was it going to be a big dollar move? Well, we haven't really got anything. Okay, so just relax, wait for the trade setups, and take care of your capital management. Cheerio.